Hello, members of Sun Lakes. My name is Christopher Mitchell, the Executive General Manager here at Sun Lakes. Today I want to take a moment and do some Q&A regarding the investments. We've received some requests from members, and there's also some rumors, of course, going around on the social media, as well as some emails that are scaring members. And so my goal today is to provide some information and give you the source of where that information comes from. So let's begin. I'm going to start with the investment questions. Today is March 11th, and we're going to proceed now. Now, first, a lot of questions come up of what are the three funds at Sun Lakes. This is a common question. There are three funds. There is the operating fund. These are, again, to pay for operational expenditures that relate to community patrol, management services, utilities, everything it takes to run the association to keep it operating. That is what the operating fund is created for. Then there is a repair and replacement reserve fund. That fund was established to pay for the replacement or repair or the extension of life of existing assets. So, we replace a carpet, we replace gym equipment. That will all be funded by the repair and replacement fund. The largest items that we use the repair and replacement reserve fund for are streets, golf course, irrigation, that replacement. Those are the big items. And every year we do a reserve study that can show, it sets a guide of when we expect these items to have an end of life and what that projected money, the cost, will be to replace those items or significantly repair to extend the life. And last but not least, we have the Capital Improvement Reserve Fund. This fund was created to address new improvements to the community. This is not existing items. This is not operating funds, but rather funds to be used for new things. Example, if we wanted to create a outdoor basketball court, this would be an item we would use. Anything that's new, that's what these funds are for. And so, again, as we moving on, this is a little, if you go look at this graphic, this breaks down the bank accounts in each of the funds. We have the operating, and we have many bank accounts within it. We have U.S. Bank paying our operating check. We have Morgan Stanley, our investment, and we have other accounts that are used for credit card processing so we could track, bingo processing. Now the capital improvement, that is Morgan Stanley, as well as some FFI investments through CDs. But Morgan Stanley is the bulk of it, as that holds our treasuries and CDs that Morgan Stanley buys on the open market. And then there's the repair and replacement. Now these are, again, the bulk of it's Morgan Stanley, and that is, again, holding government obligations, CDs, and looking long-term as well. And then finally, there are two items that are part of the repair and replacement reserve. Those are the Lions Home Settlement and the Pulte Home Settlement. These go back many years when the builder finished their work on association sections in the community. And if there was construction defect problems, these funds were set aside. Pulte is used more for issues with the road. Lions Home is mostly used for the walls near Singing Hills, Riviera down near the Habitat. Now, inquiry number 2. A member emailed the community claiming that money just was found. Specifically, this email was targeting the time period of March and April and May of 2023. So, this email really has, I think, been more of an attempt to scare members, claiming that $1 million was missing and then found. So again, let me explain how these three accounts function. That's the operating, repair and replacement, and capital improvement. Now, those three funds, they process different things. The operating fund processes payment to vendors. Transfers also pass through the account. So you have to realize that there is only one checkbook that this association uses, and that is an accounts payable department that has one sequence of checks that they cut checks out of, and that only comes from the operating. This helps with the issues that for internal controls, all your capital payments coming out of that operating fund, and it helps with tracking the checks. But also, this means that funds have to transfer from one account. So if I have an investment that I'm going to be redeeming so that I can pay a vendor for a product or service that's related to repair and replacement, those funds have to be transferred through the operating fund. The operating fund will pay the check to the vendor, but the investments have to be pulled in order to reimburse the operating fund. So I did a little graph here to kind of show how some of this works. You've got Union Bank, that's the main operating bank account. That's where your checks are coming out of to pay for these vendors. Money's coming in from assessments, etc. And then there's Morgan Stanley and then First Service Financial. We both have those within capital improvement and the repair and replacement fund. And the investment, so if we have to invest money, so every month, a portion of your reserve, a repair and replacement reserve amount is part of your assessment. Every month, we transfer that to Morgan Stanley or First Service Financial to invest. So think about it is that the Morgan Stanley and the First Service Financial accounts of CDs, etc., those are the investments. That's where the money is held for a period of time, protecting the principal, having liquidity, and also trying to get maximize the yield from those funds. That is part of the investment plan. And in turn, those investments, when we need to use them to pay vendors, again, for a product or service, those have to be transferred to Union Bank. Now, for those accountants out there like me, you can track this through the due to, due from. That's what those accounts are for. The operating fund is going to pay the vendor, and it's got to, hey, investment fund, you got to give me the money so I can pay the vendor. And so that's the process it works. The Morgan Stanley does not have a checkbook. First Service Financial and those investments don't have a checkbook. The only way money comes out of that is by transfers. So let's dig a little bit further. So in this email that went out, it mentions that deposits were mysteriously made to Morgan Stanley. And this is an example from that email, a snippet. I thank you, the member who sent it to me, that in April there was a mysterious $513,548 that appeared. And then in the May statement, a mysterious $502,842. Now, I joked during the delegates meeting, this was not Bob Walter moving his money into the accounts. That doesn't happen. So that's one rumor. Let's squash that. These are assessment funds. But what's happening here in this scare tactic of the email, it's only looking at one side of the transaction. It's only looking at what's happening from Morgan Stanley's perspective. You've got to then go back and say, well, there's multiple bank accounts. Remember that slide earlier that I did that had multiple bank accounts, and money transfers in between those. Now members can review this on a monthly basis. The board has said, hey, we want to make sure members have that information and judge for themselves what's happening. And so on the financials that were produced last month for January, the thick packet went out, and it had all of the bank statements, the investment statements, and the reconciliations related to that. Again, to allow the member to come to a decision on their own and not be fearful from these scare tactic emails. So also included with the bank reconciliations and the statements is this investment report. Now, it's tiny. I apologize. You can go online and look at the financial statement, but this is the May 2023 investment report. And you can see it lays out all the accounts for the operating, capital improvement, Lions Home, Pulte, and the repair and replacement. It tells you what account it is, what's the name of it, when is it maturing, if it's maturing, and what rate of interest is it getting, and then the amount. So looking at that, the transfer into Morgan Stanley in April for $513,548.94 actually represented money moving from the American Deposit Management Company into Morgan Stanley. It's not new money. It's money moving from one account to another. Now, I'm sure you do this in your own home. You say, honey, the bank down the street is giving us 4% on money deposited there. We're only getting 1% at our little bank here. Let's move money to get a better interest rate. Well, guess what, folks? That happens here at the association as well. And money will move to that Morgan Stanley, or will move to a money market account to First Service Financial. This is a normal business, but the emailer failed to say, here's the other side of the transaction, ladies and gentlemen. Again, Morgan Stanley received it and acknowledged it, that 513, but the American Deposit Management Company, that investment was liquidated to move the funds. Same thing happened in May. That 502,842.75 was money moved from First Citizens Bank and Trust Company. Again, not new money, ladies and gentlemen. It's just money moving from one account to another. But if you were reading the email, you would say, what is going on? There's money disappearing, there's money appearing. So, to end this presentation, I want to follow up that the money was not missing. Kind of gone through the supporting documents for that and what happened. The money represents transfers in and out from one account to another account, which is the normal practice in Sun Lakes. And reflecting on that email that went out to the members, I feel that the purpose was not to inquire, but must have been meant to scare members during an election season. So, members, I'm hoping that this video was helpful to you to explain some of the investment items that we do, the transfers, what accounts, the different funds that we have within the association. And it's important to know these things, to know it's your money. How is it being managed? Where can I find that information? And so I want to end with that I will be doing more of these videos because it appears to be that there's more misinformation that is out there in the community. And as I'm getting these emails from members that are very concerned about this, and it's unfortunate because those emails sometimes go to people outside the community, and that's a reflection on Sun Lakes, and we don't want to have that happen. So you will see more videos from me to discuss this. One of the next topics I'll be talking about is the historical use of capital improvement funds on drought-tolerant areas within the community. That was a program about 4 years ago, but seems to be now that there's a new email or new comments that are saying that it was a mandate that required this. There was a whole election process talking about drought tolerant, so I'll be getting into that more in the next video. And send me your feedback on the information that you'd like me to cover further. I'd appreciate that, and so that I can then respond to some of the concerns from the membership. That's it for now. Take care, stay safe, and we'll talk to you soon.